Hi guys, Vindy here. Let's quickly look at the USA 100. Let's start by talking about the Federal Reserve Bank, right? These guys have already started buying individual corporate bonds in, I think it was around June 15. So if we were to track back then, you might have seen how, although this is not directly related to the USA 100 or the Nasdaq 100, but we know that have had some sort of a stimulus into this upward direction. Okay, so you can see that price have been very bullish, and we're most likely to see this bullish move continuing. However, with that in mind, they've I believe they've spent around 250 billion in individual corporate bonds, so we're most likely to see them channeling more billions into bonds and ETFs. That is a possibility in the next couple of months, but we don't know how big the impact. We don't know how big the impact it's gonna be. Okay, we don't know how big the impact it's gonna be, but I believe this is actually to fuel the markets, or rather to sort of balance the markets. Okay, to keep everything in balance, because you can see they've started doing this earlier. I believe it might have contributed as well to this particular move to the upside after that drastic drop. So should the US government decides to go back to, maybe let's say, a complete lockdown, maybe we might see them channeling more funds into buying the ETFs and the bonds. So that's the fundamental part of this. However, so if I was to look at this from technical perspective, disclaimer, one might argue that, but Vindi, if the Feds are channeling so much money, is it necessary to look at to actually look at the technical part of things? I always say this: as much as we do not have inside information, the only thing that we have is the charts. Okay, so what we have to try and align is to make sure that we go in the direction of the Federal Reserve Bank. Okay, so in other words, if you watched my previous video, I was talking about buying this particular instrument. Okay, so in this case, if I come down to H4, I have my moving average here in line. You can see that buyers now are stuck not too far away from this. Yes, we're most likely to see a gap when this guy opens. We're most likely to see a gap to the upside. Okay, we're most likely to see the gap, considering how it closed on the previous session. Most likely to see a gap to the upside, probably gapping towards those projected areas there. This particular guys there, this is the projected take profit levels. We're most likely to see maybe price gapping towards these three lines there. Okay, however, as a buyer, I'll be more confident rather to look for buy opportunities when this particular thing corrects, mainly on a much lower time frame like H1. This is where I'll be more comfortable to actually buy this particular guy. Okay, that is just my view. Okay, that is just my view. As long as it can come down there, or if this dynamic structure can move a little bit up to this particular resistance area, this is where I'd actually like to look for opportunities to buy this thing. And the violation of that particular structure, the dynamic structure together with the static structure, which is my trend line, I will actually not buy this particular thing. Should price break out of this or these two, okay, I'm basically using these 2 points to draw my trend line. Okay, should price break out of this, I will actually change the time frame in which I'm looking to buy. I'm going to change to H4. As you can see, the dynamic structure for buyers on H4, it's much lower. So should this be violated, I might look for buy opportunities somewhere around about this particular area during the week to the upside. That's just my take on this particular instrument. And if we were to look at it from a different angle, I believe if you're to look at your stochastic or maybe your RSI, you're most likely to see some sort of an overbought condition up there. Okay, most likely to see this in that extreme overbought region. Okay, just pull that out and check it out, see if you can find it. That's just my check for this particular guy. I'm gonna look for opportunities to buy this guy. However, I'm not comfortable selling at the moment, as much as this thing it's extremely up there. I'm not comfortable with that decision, mainly because of the feds. Okay, but should price starts coming down, I'll look for opportunities to buy much lower. Okay, so this is another area that you can identify on 15 minutes, which is just this area of support. A break below this trend line, it's going to take us to this H4. Okay, that's where I'd like to also buy. So you have options, you have three options. You might buy here, look for opportunities to buy. By opportunities, this is where you need to now implement your strategies, or you might buy down here. But if price gaps up, obviously this dynamic area is also going to move up, hence the word dynamic. Okay, referring to objects that actually moves. Okay, so there isn't zero acceleration there, so it's that acceleration is not zero, because this is a moving average. It does move with price, but the trend lines that we've drawn manually, they don't move at all. So that's why we refer to those as static structures. Okay, so that is my view on this particular thing. If you were to look at it, maybe let's say you were to put your, let me see if I can find the boxes there. If you were to put your boxes, you can see how now price, it's extremely trading. At least it actually closed high, took out the Thursday side there. Okay, and remember, it took that out, went up, took out stop losses of the previous sellers, or these sellers, or those sellers there, took out those stop losses. And then if it gaps up, it's most likely to take out stop losses of those who sold. I'm pretty much sure that people who sold thinking that, dude, it's high, let me just sell in case if it goes down, I'm gonna capitalize more. So yeah, it's most likely to take out stop losses, most likely to take in pending orders as well on its way up. So using this particular structures, this is resistance. Obviously, this is resistance. The Friday one as well is resistance. So if you remember those H1 levels that I was referring to, one of those levels was actually somewhere around that point, which is support. These are intraday levels of support. Okay, so this is where we're most likely to see buyers. If you go back down to H4, this is another area of support where buyers might start piling up from. Okay, even this particular region there, this is where we're most likely to see buyers coming from. However, if this keeps on pushing, we will keep on updating this particular setup. Probably look for buyers on much lower time frames. Okay, so you can see this is extremely up there. If you are a seller, make sure that you use this particular trend line or update it, because the market could gap. Use that particular trend line and apply your strategy, a trend line break or whatever that you use to trade sort of reversals or pullbacks. Just apply whatever that you got there. I'm just directing you as to what you can do if you're a seller or if you are a buyer. As a buyer, you've already seen where I'd like to buy. If you're a seller, obviously track this particular structure there. See if it's broken, retesting, whatever that you use there, go ahead and take that position. Remember to use a stop loss. Obviously, don't do what you see on social media where people, they just take 50,000 positions at once. So just take one position, put a stop loss so that you can be able to manage nicely. I've seen a lot of beginner traders doing that, and they keep on taking multiple trades, and at the end of the day they exhaust their margin and reach their margin call easily. So make sure that you take one position. Always take into consideration risk management. It's all about managing your risk. No matter how good you are, no matter how professional you think you are, or no matter how long you think you've been trading, this thing doesn't respect human beings. Okay, the markets doesn't respect human beings at all. So what we have to do is to respect the market by actually positioning our trades. Okay, so make sure, keep that in mind. And remember, I'm not here to sell you dreams. I'm not here to tell you what you wanna hear. If you wanna be told what you wanna hear, maybe you should check other channels. Unfortunately, I'm not going to sell you dreams. If you're trading real money and you have financial responsibilities, make sure that you use risk management. There's a video that I did. Check the channel, a bunch of videos there. There's a bunch of videos on how to enter, how to find entries. Yeah, the videos, just check those videos out, and you should be able to gain one or two things. Otherwise, should you have questions, please hit me up. There's a Telegram link in the description box below, or just check the comment box. You should be able to see that. Okay. Otherwise, sharp.